Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures are rising this morning as global equities trade at record highs. Investors optimistic on the prospect for a rate cut at the Fed's September meeting following the July Consumer Price Index report. Treasury Secretary Scott Bessent telling Fox Business the Fed should be open to an outsized cut at its next meeting. He went on to tell Bloomberg that the central bank's policy rate should be at least 1.5 points lower. Plus, CoreWeave shares are falling as the cloud computing provider delivered a disappointing earnings outlook tied to the cost of its rapid build-out of AI data centers. The stock was one of the big winners of the AI boom this year, seeing its share price nearly quadruple since its March IPO. And crypto firm Bullish raising $1.1 billion in a big IPO. The company operates a digital asset exchange and owns media outlet CoinDesk. Tom Farley, the former president of the New York Stock Exchange, is CEO of Bullish, and he's set to add the chairman title after the close of the IPO. Peter Thiel's Founders Fund and Thiel Capital were early investors in Block.one, the blockchain software company that helped launch Bullish in 2021. Galaxy Digital also has a stake in Bullish. Let's get a check-in on stock futures here this morning. We have been seeing record closes for the S&P and the NASDAQ, and we're seeing indications for gains here today. The S&P pointing to a gain of about 0.25% at the open, the NASDAQ and Dow pointing to gains of about 0.33% each. Let's dig into our top stories of the day now. First up, U.S. stocks trading at record highs as investors price in rate cuts from the Fed. Plus, how low will they go? Treasury Secretary Scott Bessent calling for far lower rates. And we'll dig into investor exuberance and how far the rally can go with the risk of rising inflation. Joining me now from the NASDAQ, Ali Canal, along with our Fed correspondent Jennifer Schonberger and senior reporter Inez Ferre. Ali, let's start with you and the leg of the rally that we've seen most recently, which seems to be fueled by hopes for lower rates, pushing things to records.
Right, and those rate cut hopes, that stems from CPI. And what's interesting is that there was really things in this report that could appease the optimists and the pessimists. We did see headline inflation coming on par with expectations, dropping on a month-over-month basis, but we did see firmer core prices. Core inflation hitting a 6-month high. Services inflation also firmed, and heading into this report, that had been softer and was really offsetting a lot of the increases that we saw in core goods. So under the hood of CPI, there are these concerns, but right now, this clearly was a better than feared report in a lot of ways, and that's leading to this latest record high, the S&P 500 closing for its 16th time this year at records. And leading up to today, it hasn't all been driven by Fed policy. A lot of it has been driven by earnings expectations, along with the AI story. Earlier this week, we saw Citi increase its price target on the S&P to 6,600, and they specifically cited earnings momentum, not just for the rest of this year, but also 2026 and beyond. Now, that's not to say we won't see some choppiness and some volatility. We have Jackson Hole coming up later this month. There usually tends to be some chop around that. We still have a lot of economic releases to come, and also considering the fact that stocks are still trading in this euphoric territory, that makes markets a lot more vulnerable to potential downside risks. But it's clear that rate cut hopes in September, that if we see that materialize, that's only going to fuel the momentum that we've been seeing in recent weeks and recent months.
And Jen, I want to go to you because Treasury Secretary Bessent making the media rounds as he likes to do, and talking about where he would like rates to be.
Yes, he has been vocal, as has the president. Bessent calling for a 50 basis point rate cut for September, saying that we could have already seen a rate cut in June, that the economic case was there. And by the way, I have spoken to some economists who do share that view. Whether or not the Fed actually goes by 50 basis points in September remains to be seen. I think that would be a heavy lift at this point. If they do end up cutting, I think it would be 25 basis points. And I just want to say, I checked Fed funds futures right before I hopped on with you here. It is remarkable to me to see that there are now pricing in 99.9% chance that the Fed cuts rates. When I looked at that CPI report yesterday, I think there is some in there, to Ali's point, for the Hawks and the Doves. I don't think it's a slam dunk at this point. The market is really trying to force the Fed's hand at this point. Typically, when market odds are better than 80%, the Fed does go. So if Fed Chair Jay Powell, other members of the Fed want to pull the market back from that expectation, then something is going to probably need to be said at Jackson Hole. If we don't hear anything, any pushback on that, then there is probably a higher probability that they will go, just given where the markets are. And you and I have talked about the notion of the upcoming jobs report, what that will mean for the Fed as they look at both sides of their dual mandate. And just one more point, Michelle Bowman, Fed governor, who dissented at last policy meeting for wanting to cut by 25 basis points, said in comments over the weekend that the Fed needs to be proactive. And she seemed to indicate that she's watching the labor market. If we see further deterioration, and I'm reading between the lines here, she could be in favor of a 50 basis point rate cut. So it'll be interesting to see if we get a weaker jobs report on September 5th for the month of August, right before the FOMC meeting, whether some of those doves push for a larger sized rate cut for September, which would be similar to the playbook we actually saw just 1 year ago.
You know, Allie, just to expand a little bit on what Jen is saying about that there is still this debate going on about September. Yes, the market's pricing it in entirely, but on the street, there is still some debate out there.
Yes, yesterday I spoke with Morgan Stanley economist Michael Gapin, and he is still sticking with no rate cuts in 2025, even after that CPI print. He's told me that right now there's just a lot of momentum in inflation that's pulling the Fed further and further from its 2% target that justifies remaining on hold. He also said the labor market, even though the unemployment rate is low, we are in a very tight labor market due to those immigration controls. So he believes the Fed will remain on hold. That being said, he did say that there's a lot of data that will come before that time. And he also said that the Fed might want to take out an insurance cut to offset any potential weakness in the labor market. So he's not totally ruling out the possibility, but overall, he's still sticking with that call of no cuts this year. And he's not the only one. We have heard that from other economists and firms. So we'll have to see. I do agree with Jen that whatever Powell says at Jackson Hole, he's likely going to telegraph the next move from the Fed. He's been pretty good with that in the past, and that should either confirm the market's expectation of a September cut or potentially adjust that a bit.
And Inez, also, you've been looking at the research here in terms of what is expected in terms of rate cuts, because kind of to Secretary Bessent's point today, it's not just about what happens in September, it's then also what happens after that.
Yeah, that's right. And I've been taking a look at UBS and their position on all of this. And UBS has been pretty firm that they believe that rate cuts will start in September. And they believe that it will start at 25 basis points and it will continue on each meeting through January in order to shave off for a total of 100 basis points. And their thesis is basically that they're expecting to see perhaps inflation continuing gradual upward movement, but you are going to have pushback from shelter costs that are slowing and also from a stretched consumer. So any impact of tariffs on inflation, that will be offset by that stretched consumer and by the slowing shelter costs. And so they're expecting to see rate cuts starting in September, but on a 25 basis point cut.
Right. So there, obviously, we've got a lot of dispersion of the expectations. And then, Jen, got to come to you on this report this morning that maybe it's not 4 people anymore that the president is considering to replace Jay Powell as head of the Fed. Maybe it's 11 people. But, you know, it seems like the White House is pushing back on that notion a bit.
Yeah, Julie, so much for President Trump's comments just a week or two ago that he shortened the list to 3 or 4 candidates. We also did hear from Treasury Secretary Scott Bessent, who said he is widening the net being cast for who the next Fed chair will be, and that they're looking at criteria beyond a candidate's views on monetary policy. They're also looking at how that potential next Fed chair could revamp the Fed. Curious to know what they're looking for exactly there. Obviously, the Federal Reserve, an independent agency, though the president, the White House, been pushing the Federal Reserve for rate cuts. As the Fed has said, more, we want to wait and see. And there was a report this morning that there are 11 candidates under consideration. But I got pushback from the White House this morning. Deputy Press Secretary Kush Desai telling me in a statement that, quote, President Trump will continue to nominate the most competent and experienced individuals to deliver on his pledge to make America wealthy again, unless it comes from President Trump himself. However, any discussion about personnel decisions should be regarded as pure speculation. So sort of slamming down that report of those 11 names, which included Rick Ryder from BlackRock. It was quite a list there, Julie.
David Zervos of Jefferies, some real wild cards. All right, Thank you guys. Appreciate it. Ali, Jennifer, Inez. Let's get to an individual stock story now. Cava plunging after missing expectations for same-store sales in the second quarter and lowering its full-year sales growth forecast. Yahoo Finance senior reporter Brooke DePalma here now with more on the biggest takeaways from those results. Hi, Brooke.
Good morning, Julie. Shares are down now about 23% in early market trading right here, rather pre-market trading. And one analyst from JP Morgan called this a crack in the momentum that we've been seeing from Cava. And largely what this ultimately led to was that first time ever that we saw this company since its IPO in June 2023 decide to cut its full year guidance when it came to same-store sales growth. Let's take a start there, because what led to this was ultimately lower same-store sales growth throughout the quarter that then took them to the decision to cut their same-store sales growth outlook for 2025 down to the range of 4% to 6%. That was down from the previously expected 6 to 8% range. Once again, this is the first time that the Mediterranean fast casual chain has ever done this. And during this quarter, we did have two key factors that really played into that lower same-store sales growth. They said that was the lapse of the introduction of that new protein steak that launched in 2024. And so when it came to the second quarter of 2025, it was ultimately lapping that gain that they saw in 2024. And in addition to that, they also called this the honeymoon effect. This was the first time ever that Cava had experienced this honeymoon period. Essentially what that meant was that they opened these stores in 2024 that really saw such strong same-store sales growth. Then when you come into 2025, what they saw at those stores that really outperformed their expectations was negative same-store sales growth. So they're calling that this honeymoon effect. Now, also what we saw was ultimately what they called this fluid macroeconomic environment. And that's what led to this large decline in same-store sales growth. Now, it was up 2%, but compared to the previous quarter, and especially where we were last year when we saw 14% sales growth, now we just saw 2.1%. And that also missed Wall Street's expectations of up more than 6%. And Cava called this a fluid macroeconomic environment. They said that consumers aren't as energetic. They were really stalled by the dynamic and the challenges that they were up against during Q2. As we make way into Q3, they are seeing a bit of momentum pick back up. And also analysts are keeping a close eye on menu innovation like salmon and chicken shawarma to perhaps bring customers back in the door.
Thanks so much, Brooke. And stay with Yahoo Finance. In the next hour, we'll be talking to Cava CEO Brent Schulman about the results and how the company plans to navigate the uncertain macroeconomic environment. Don't miss that. Bullish, the cryptocurrency exchange and owner of media outlet CoinDesk, plans to make its debut on the New York Stock Exchange today under the symbol BLSH. The company raised $1.1 billion in an oversubscribed IPO where it sold 30 million shares for $37 apiece. They were previously marketed at $32 to $33 each. Some of the potential buyers include BlackRock and Cathie Wood's ARK Investment Management. They've indicated interest in purchasing up to $200 million of those shares. The company offers crypto spot trading, margin trading, and derivatives trading with a focus on institutional investors, according to its filing. At its helm, former New York Stock Exchange president Tom Farley. The offering is being led by JP Morgan Chase, Jefferies, as well as Citigroup. Bullish previously attempted to go public via a SPAC in 2021, but that plan was abandoned amid market volatility. Now time for some of today's trending tickers. We're watching Tencent Airlines and Chili's parent company Brinker International. First up, Tencent's revenue jumping 15% in its most recent quarter, boosting investor enthusiasm toward its place in the global AI race. The tech and entertainment giant is boosting its investment in AI. It reiterated that in Wednesday's results in an effort to compete with rival Chinese companies Alibaba and ByteDance. Tencent, the first of the Chinese big tech firms to report earnings this season. In the wake of DeepSeek's revolutionary LLM breakthrough that roiled U.S. big tech, investors will be closely watching for further insight into AI investment. Next up, airline stocks are moving this morning after the sector saw its biggest one-day jump in more than a month yesterday. Tuesday's CPI release showed airfares rising 4% in July. That's the first increase in 6 months. It's a welcome sign of renewed pricing power for airlines, which had been pressured by discounting efforts in order to woo budget-cautious consumers. The airline sector down about 9% so far this year, seeing some little gains here this morning. And finally, Chili's and Maggiano's parent company Brinker International posting better than expected revenue in its most recent quarter, thanks to increased demand at Chili's in particular. Same-store sales up 24% at Chili's, boosted by menu changes and value promotions. The company also gave full-year guidance that topped analysts' expectations. The CEO said he is confident in the company's ability to boost sales and traffic through the end of the year. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, futures are ticking higher ahead of the open, looking to extend gains after the S&P and the Nasdaq closed at record highs. Markets getting a boost from rate cut bets. Traders now pricing in a more than 90% chance of a cut in September following July's consumer price index. Joining me now, Jeff Crumpelman, Mariner Wealth Advisors Chief Investment Strategist and Head of Equities. Jeff, it's good to see you again. So is the market getting this right, do you think, in terms of that almost certainty that the Fed's going to cut in September?
Well, I don't know. I wouldn't gauge what the market should do based upon its assessment of, speculating about the Fed. I think it's a lot more than just, 99% Fed futures probability about, Fed rate cut. We've had periods historically, you go back to 2023, where I think the motto was, we better get 6 or 7 Fed rate cuts. And the market seemed to want that, or we're going to get a market meltdown and a massive recession. That never happened. We got one cut late in the year, and the market, was up over 25%. So, I think we've had a wonderful earnings season, and we lose sight of that. Earnings in Q2 were up. I think they're going to be up close to 13%, almost 3 times the rate of growth that we thought we'd see going into this quarter. And when we look at individual stocks, we see a lot of, just really great stories. The hard data's been resilient, held up pretty well. Earnings are strong. And I think that's part of the story, too. Whether the Fed cuts or not, I loved your panel. I thought that was a wonderful discussion. And you're right. There's enough out there for doves or hawks. I don't think they have to do anything, and we're going to get a lot of data before that happens. And I don't think the market's going to crater if the Fed doesn't cut, but be ready for some mood swings that are temporary in nature, that could move the dial around as we get that decision.
Well, and to your point, Jeff, stocks were reaching records even before we had this outlook for the Fed cutting in September, right?
Sure,
and that seemed to be driven by earnings, right? And by, in particular, the AI trade. So there has been a little bit of shakiness in some quarters in that trade recently. You can look at CoreWeave, for example. You can look at the release of ChatGPT 5, which was a little rockier perhaps than OpenAI would have hoped. But do you think that there are some chinks in the armor of that trade going forward?
I would just be careful on concentration risk amongst those stocks that have led. We go through several times a year, not only ongoing basis where we look at individual stocks on an ongoing basis, but we do a really deep dive amongst our team on all stocks owned twice a year, where we just rip everything apart, all the analysts, all the portfolio managers. And you look at NVIDIA and you look at Microsoft and some of these names that have led, they look great. They really do. But there's a lot of other opportunities out there where you don't have to own the same level of exposure as you find in the S&P 500 and Russell 1000 growth. So buy some Oracle. Just step out a little bit and diversify. All of those are linked to AI. But yeah, I think the AI trade continues, but let's just kind of stretch out and diversify a little bit here.
Gotcha. And one of the sort of models, I guess, you're sort of applying to how you think about this market, you guys call clear air turbulence. What does that mean?
Yeah, we're not pilots or aviators, but I think it's been almost a perfect description of what's happened this year. Every year we have a theme going into the year about how we think the market will evolve. Clear air turbulence happens, if you're flying in clear blue skies and out of nowhere, can't be detected by weather radar, can't be seen by the eye, the naked eye, you drop several hundred or even thousands of feet unexpectedly. But you navigate through that through great pilot, skill and communication. Pilots talk to one another and they avoid it. You rise back to previous altitude through that skill and good communication, and you continue to land at your destination as planned. You just kiss the ground once you get there. So a lot of volatility, but a successful mission. And I think that's kind of what this boils down to. We see 6,600 in the S&P 500. We got that big dent because of policy and lightening up in confidence. Now we got the legislation, the quote, one big beautiful bill behind us that will lead to some growth and tax cuts. We're tariffs. We got a little bit of a timeout. We'll have to see what this ultimately plays out, but I think it will be lower tariff rates than feared back in April by a large margin, and earnings have been solid. So I think that carries you to that altitude, but we're going to sweat over the Fed and sweat over where will tariffs be and all this stuff. This news flow, those are just mood swings. They self-correct.
Jeff, good to see you. Thanks for joining us.
Thank you.
Coming up on Yahoo Finance opening bid, our executive editor Brian Sazzi joining me now with a little teaser. Zaz, what do you got coming up?
Flying into the show, Julie. Good to see you. Enjoyed that market chat right there. We're going to keep it rocking. Going to drill further into all things CoreWeave. That Cava shares are starting to plunge. Good rundown by Brooke DePalma on what is driving that stock down lower. And then an important milestone today for Starbucks, Julie. I'm not telling you, not telling our audience. That's what we call a deep tease.
Ooh, I have to watch now. I have no choice.
Please do. Thank you so much.
Thanks. That does it for Morning Brief. Much more ahead on Yahoo Finance. Keep it here.